Elon Musk has announced his decision. That's it. He wants to leave Twitter after all these lies and collusion that happened. It's crazy how things changed, but Twitter is in a tough situation right now. Musk has declared his decision to leave his position as Twitter's CEO and provided a precise date for his departure. With that, Musk opened up why leaving the post and how it is very difficult for him. But what is Musk going to do with Twitter's biggest problem? Elon has stated that Twitter's financial situation is extremely difficult and various giant actions must be taken immediately to prevent the company from collapsing. The situation of Twitter is far worse than Musk expected. The stakes are so high that Musk compared it to an airplane hurtling into the ground with all of its engines lit and inoperable controls. And Musk came up with a unique two-pronged strategy that, as Elon hopes, will undoubtedly be the answer to the company's problems during this extremely challenging time. Also, the Wall Street Journal has reported that as the debt matures over the next 7 to 8 years, it will drain Twitter's bank account, with interest totaling a stunning $9 billion. Musk also increased the number of Twitter's paid memberships in order to combat a potential financial crisis. Furthermore, it takes a lot of work to find a new CEO for Twitter. He has a history of completing tasks successfully, so the social media network may rely on him to make things right. And Musk has identified a key quality that will be prioritized in the search for a new Twitter CEO. However, the microblogging service depends on advertising for up to 90% of its income. Musk has devised a plan to alter this equation and lesser Twitter's reliance on advertising. Musk has identified the only significant remedy that can stabilize the conflict between the business and advertisers in the grim economic environment. This is a very interesting situation, so let's explain it. Even if someone is not a financial wizard by any definition, a cash flow in the negative, reaching up to $3 billion per year, paints a pretty blotchy financial picture. That is the sum Elon Musk has been quoted his company would have lost annually had it not been for his drastic cost-cutting measures. Twitter was a disaster waiting to happen. Musk likened it to an airplane careering towards the ground with all its engines alight and controls that have lost the capacity to function. The scene of action was the Twitter Spaces online forum, where Musk quelled concerns by offering a legit explanation behind the cost cuts at Twitter. It all boils down to survival. Partial blame was also attributed by Musk to the company's takeover, which incurred a debt of $12.5 billion. The calamitous situation has been further knocked off balance by the upsurge in rates as proposed by the Fed. According to the Wall Street Journal, the coming 7 to 8 years will drain Twitter's coffers with an interest of a whopping $9 billion as the debt reaches maturity. Another firefighting measure that Musk took to stave off potential financial disaster was to augment Twitter's paid subscriptions. Musk admitted that some of his actions might seem spurious or odd, but did confirm that Twitter has what can be termed an emergency fire drill to contend with. The Tesla CEO, who struck a $44 billion deal to acquire Twitter, made power moves and elaborated on his strategy to slash costs. The step comes in the wake of his pronouncement to remain at the helm of affairs at Twitter and hold on to the position of the platform's CEO until he can find a suitable candidate to fill his shoes. Our words, not his, as the tech mogul has left some pretty distinguished tracks on his path to his monumental success. When it comes to heavy-duty number crunching, Musk's actions need no defense. As per his confession, he had been engaged in cutting costs like crazy in the 5 weeks before this period in a bid to prevent said cash outflow worth $3 billion. Call it a disaster control mechanism of sorts. Musk has his work cut out for him. There are no diverging opinions on this front. Finding a new CEO for Twitter is no mean feat. The originator of SpaceX has on prior occasions acknowledged that it will be difficult to find a substitute. In a jovial quip with avid fans, he recounted the characteristics that the person who is going to be exchanging places with him must possess. This includes having an affinity for the pain to step into a leading position at a company that is en route to bankruptcy. That seems like a tightrope only Elon can be trusted to walk. With several successful projects under his belt, he can be counted on to turn things around successfully for the social media network. Musk also took the Twitter Spaces call as an opportunity to clarify matters on the advertising front. According to the astute entrepreneur, advertisers' reluctance to shell out dinero on Twitter stems from their cautious stance regarding grim economic prospects as opposed to any apprehensions that revolved around content moderation. Musk addressed the issue further by concurring with the advertisers' decision to pull back from investing in the current murky scenario, in which the prospects of a return on investment remain unclear. The one thing that will rate favourably with advertisers in the dreary economic climate is a solid return on investment plans. Musk, who is no stranger to stepping off the beaten path, remains optimistic about Twitter Blue. For those who are not familiar, Twitter Blue is the platform's newest feature, a subscription service charging a rate of $8 from its subscribers. That is the price for those who use a web browser to avail the service. Apple mobile users get to pay $11, as the Wall Street Journal reports. Musk is pinning his hopes on the paid service to alleviate costs. The revenue generated will go a long way in meeting company expenses. According to Elon, hardware costs make a dent of $1.5 billion in the company's budget on an annual basis. To us, this seems to be Musk's plan A to bear the costs of the friggin' server bill, as he likes to call it. Despite all the economic travails the company has been pushing through valiantly, Musk's prognosis for the upcoming year is staring at the upside, the sunny side of things, so to speak, adopting a two-pronged strategy that involves slashing costs and pumping up subscription revenues. Twitter is expected to be in relatively calmer waters next year. Elon thinks that in the coming year, Twitter is going to be okay. Whew, that brings much-needed relief. Not only will Twitter be in the okay category, but according to Musk's calculated estimate, it will also break even. The company was slammed with a loss of $224 million in the year 2021. The microblogging platform relies on advertising to generate up to 90% of its revenue. Musk is strategizing to change this equation and curb Twitter's heavy reliance on advertisers. According to Musk, the current figures that denote people currently employed at Twitter is exceeding 2,000 by a small margin. The mass layoffs that have been undertaken at Twitter in the recent past saw its workforce lose roughly half of its strength. Things had touched a pretty low ebb money-wise, as only recently the enterprising entrepreneur had gone public with the company's financial quandary, as it was facing a daily loss of $4 million and plummeting revenues. One doesn't need to go too far back in the Twitterverse. Profits have evaded the social media company since the year 2019. And that is not all. Figures from the past decade indicate that loss was recorded in 8 years. Making the requisite changes was the need of the hour. According to Elon, the company would have further experienced a cash outflow that varies between $6 billion and $6.5 billion. Looks like cost-cutting was a much-needed gesture to avert disaster. According to Musk, Twitter has a cash amount of about $1 billion. This would have further exacerbated the company's sagging economic situation. That's it for today. Subscribe to our channel and hit the notification bell.